If I could go back in time and give my younger self one simple piece of advice, it would be this. Do not try to get rich quick overnight. Yes, great results are achievable in short amounts of time, but those results are not typical. I spent years trying to get rich quick through penny stocks, options, crypto, and everything else. And it took me going broke multiple times before I realized that true wealth is built slowly over time. This is why in today's video, I wanted to share with you guys the ultimate beginner's roadmap to successful stock trading. This is something that I wish I had when I first started out, so hopefully this helps you guys. I'm going to cover 3 very important things in this video. Number 1, what you should focus on in the beginning. Number 2, the must-avoid mistakes. And number 3, I'm going to end off the video with some motivation on how to stay committed to your goals even when times get tough. In the beginning, you need to focus on learning and understanding the basics of the stock market. What are the major indexes? How does the economy work? What are interest rates and inflation? What are the major companies within an index like the S&P 500 or Dow Jones? You also need to learn about different types of investments like stocks, bonds, mutual funds, ETFs, options, futures. Understand the difference between these investments, how they work, and most importantly, understand the risk that comes along with them. For example, options and futures are very risky investments, and most beginners should avoid them until they have experience and understand the risks involved. But with higher risk comes higher reward. When I first started out, I only had $600 in my account, and I was trading options like an idiot. I ended up losing all $600 in just a couple weeks. Needless to say, if I would have just bought SPY at the beginning of 2020 and just held it, I would have made so much money. I would have been a millionaire, but I didn't because I was trying to get rich quick. Next, you need to figure out your goals. What are you trying to accomplish by investing? Are you investing for retirement, for your kids' education, for a down payment on a house, or just looking to grow your wealth long term? Once you figure out your goals, you can start building a plan to achieve those goals. Also, you need to understand your risk tolerance. How much risk can you handle? Are you the type of person who will panic and sell when the market drops 20%, or will you stay calm and continue buying as usual? If you don't know your risk tolerance, you can use a questionnaire to help figure this out. There's plenty of free ones online. Now let's talk about what you should not do. Avoid getting caught up in the hype. Don't buy into something just because you see other people making money. Do your own research and invest in what you believe in. Don't fall for get-rich-quick schemes. If it sounds too good to be true, it probably is. There's no such thing as a guaranteed way to make money in the stock market. If someone is promising you this, run. And avoid trading on margin. In the beginning, you should not be trading on margin. It's too risky and it's a great way to lose a lot of money very quickly. Now, let's talk about motivation. Staying motivated and committed to your goals can be challenging, especially when times get tough. But here are some tips that can help. Remind yourself of your goals. Why did you start investing in the first place? What are you hoping to achieve? Write down your goals and keep them somewhere visible as a reminder. Break down your goals into smaller steps. This can help you stay focused and make progress towards your goals. One step at a time, reward yourself for achieving smaller goals. This can help keep you motivated and on track. Remember why you started. If you get caught up in the day-to-day fluctuations of the market and forget your long-term goals, you might get discouraged and give up. So, always keep your long-term goals in mind and focus on those rather than the day-to-day movements of the market.